Good evening, welcome and thank you for joining tonight's webinar on Market Outlook, presented to you by Jieyuan from our Phillip research team. My name is Ming Jun, and today we will be sharing with you on the outlook on China's economy, and also share with you some ideas as to which sector you can look into at this very challenging period. So on your screen now, you are able to see a poll question, and this poll is just to get a consensus from our clients on how long do you think the impact from this virus will last on the China's economy. Okay, so without further ado, let me just quickly share with you on our today's agenda. Okay, so Jieyuan will be giving a brief summary of the situation in China and also the impact in China's economy as of now. And he will end off with the sector recommendations. And I will then proceed on to share with you on the current promotions that Phillip have in store for you, before sharing with you some TA on indices as well as certain counters, and ending it off with our Q&A session. So meanwhile, if you do have any questions, do feel free to post it on our Q&A tab, which can be found at the bottom of your screen. And now I will pass on to Jieyuan to share with you more. Jieyuan, please.
Thanks, Mingjun. First, let's look at the two COVID-19 statistic chart in China. The first chart is the newly diagnosed and the suspected cases in China. The blue line represents the newly diagnosed cases, and the red lines represent the newly suspected cases. From the chart, we can see the numbers of the new confirmed cases and the suspected cases in China has been gradually reduced since the February 4th and have been decreased over 7 days. It mainly for the sharply increased happened on the February 12th. It's mainly due to the change of the definitions of the diagnosis. On the second chart, we compared the newly diagnoses in Hubei province and in total China. We noticed that over 80% of the newly confirmed cases are coming from the Hubei province. Also, for other province, which is the yellow lines, the newly diagnosis has been decreasing since February 3rd and have been decreased for 15 consecutive days. From the above two charts, we can draw two conclusions. The first one is we think the epidemic situations in China is under control. Secondly, Hubei province is still the centralized outbreak area of the epidemic. Based on that, combined with recently we observed some South City have organized the companies and employees to back to work, we expect epidemics will control in first quarter. Except Hubei province, other provinces the economic activities will back to normal in second quarter 2020. Then the first question is how the epidemic situations will affect Chinese economic. Here we take the 2003 SARS case as a reference. The reasons why we take 2003 SARS as a reference is both SARS and COVID-19 have an impact on the consumer industries because of the population's aggressions and flow. But we need to take notice that SARS and COVID-19 are different from the region scope and duration. Compared to SARS, COVID-19 is more infectious, but different from the 2003. China government are taking more strict measures to prevent the spread of the disease. We expect the durations is relatively short. Let's see two charts of the 2003 SARS. This chart shows the GDP growth in 2002 to 2004. The blue lines represent the GDP growth and other three lines represent the growth of the different industry. Given the SARS mass outbreak happened on 2003 March and relieved on 2003 May, we noticed that GDP growth in the second quarters of the 2003 dropped from 11.1% to 9.1% and seeing a recovery in the third quarter. Also, for the third industries, we are seeing it takes the more than one quarter to recovery. In conclusions, the trend of the GDPs is highly relative to the timeline of the SARS, and the impact to the general GDPs were only temporary. In conclusions, the trend of the GDP is highly relative to the timeline of the SARS, and the impact to the China GDP were only temporary from this chart. Industrial-wise, from this chart, we can see SaaS has a bigger impact for the output value of the transportation sectors, accommodation sectors, and the financial sectors. For each sectors, I will expand or analyze in the market analyze part and give our recommendation. For the policy side and the policy stimulations, we see the same patterns like the 2003. China central banks are doing the interest rate cut and the money losing up. The reasons why I take the MLF and LPR because we see as a benchmark interest rate for China government. Also, to need to take notice that in the recent government work report, China central banks particularly mentions that restrictions for the real estate won't loosen up and need to make sure the fund will be released to the companies. In conclusions, in the reference to 2003's SARS case, under the current situations, we think the GDP growth rate in the first quarters will drop rapidly in the first quarter and recovered in the second quarter. In the medium and the long runs, I don't think the epidemic will change the directions of the Chinese economic. Also, need to take notice that 2020 is the last year of the final building of wealth society. It means in 2020, China's GDP growth needs to be reached 5.6% year on year, and it already been mentioned in several government meetings. To understand this, you need to understand China will be more than 5%, need to be reach more than 5% year on year. At last, let's see how the epidemic situations will impact the China A-share market. From this chart, we can see the Shanghai Composite Index. We notice that after the sharp decrease on the February 3rd, which is the first trading days after Chinese New Year, the market has been recovered in these 3 weeks. Here, we can draw conclusions that the first effect of the epidemic in the share market have been relatively gone. For the valuation side, as of the February 25th, Shanghai Composite Index are trading at 13 times the PE, much lower than the Dow Jones Industrial Average, which trade at 22.6 PE. We believe that in the valuation perspective, China A shares is still very attractive. Then, how we choose the sectors or companies to invest? I think in these situations, we need to pay more attention to the company's performance, especially the profit situations. Let's doing the industrial analyze the one by one. The first one, let's look at the financial industries. From the total output value side, we can see in the second quarters of the 2003, financial sector actually is the most influenced by the epidemic situations. To understand this chart, you just need to know the right means the good and the blue means the bad. So we can see from the first quarter to the second quarters, the financial industries GDP growth dropped from 11.3% to 7.7% in second quarter, and it takes more than 3 quarters to recovery. In the result perspective, for the banking companies, from this chart, we can see in the total 2003, the banking companies, the profit situations is relatively stable. And we think the profit decreasing is mainly affected by the interest rate cuts, but we can see it's in a very small percentage. We are seeing the same patterns in 2020 and 2003. So we believe the performance and the profit of the banking companies will be relatively stable in 2020. For the non-banking financial companies, from the profit chart, we can see they have a big decreasing on the second quarters. The non-banking financial companies mostly are the brokerage companies and insurance companies. We think, especially for the brokerage companies, we think it's in 2003 particularly, its profit is mainly affected by the daily tradings amount. But unlike 2003, currently we observe the daily tradings are hitting the historic high since 2015. So in this perspective, we are quite positive about the first quarter result of the brokerage companies. Here, we recommend all investors to pay attention to the brokerage companies. In January, the daily average turnover of the shares was about 700 billion yuan, up about 36 months to months, and over 100% year-over-year. There's 34 brokerage companies released the January's revenues and the profits, and the brokerage companies earned more than 18 billion yuan in January, up about 4.5% year-on-year. The list shows the top 10 revenues the brokerage companies, and is target priced from the Wind. The Wind is a financial service data service provider like Bloomberg, but mainly focused on the China. It's a target priced from the Wind. Let's look at the real estate industries. From the total output values, on GDP side, we are seeing the second quarters of the 2003. The output value of the real estate actually is the perform well. Few of the perform well sectors in 2003, but we can see there is a big drop on the third sectors and slightly recover in the fourth sectors. In the result perspective, here we compared the real estate industries and some post real estate industries like electronic and the constructions materials and the constructions, the four sectors that to do the comparison. From the profit perspective, you can see actually in the first quarter of the 2003, the profit is quite well, but we are seeing the big decreases in the second quarters. It's mainly due to, but if you compare the second quarters and fourth quarters, we are seeing a big jump, a rebound on the third quarters. So the situations in 2003 is, in the long run, the demand for the house purchase has not been disappeared, but has been delayed. I think the situations in 2020 is the same. For the here you can pay attention to this big red, which is the construction material. We are seeing the big jumps of the construction materials profit in the third quarters and in the fourth quarters, and it's mainly benefit from the steel and the cement price going up. Also, the infrastructure projects open up. Currently, we have observed the same patterns in 2003, and the several government meetings already mentioned to accelerating the 5G infrastructures project going on. The reasons why I mentioned the China GDP must to stay 5.6% year-over-year is because the three contribution, part of the contribution to GDP is consumer, investing, and infrastructures. We are seeing there is a decreasing in the consumer sectors and the investing sectors. So if the Chinese want to maintain the 5.6% year-on-year GDP growth, the infrastructure project will be the main contribution to the general GDPs. Here, we recommend the constructions, materials, and 5G sectors to help you to pay attention. The list shows the 5G SIMS stock, and it's all involved in some infrastructures, the project. Like people, like the popular stocks like China Tower currently are trade at over 100% PE, and the target price, the Wind target price is 2.81. Another stock is very popular is ZTE. Actually, ZTE is one of the most performed well in this year's. The stocks both in China mainland and on Hong Kong stocks. For the retail and the transportation sectors, actually, I think it may take a long time. From this chart, you can also see it may take a long time to recovery, which will depend on the judgment of the states and of the epidemic situations and the time point when public feels safe to go out and consume again. But we also think is maybe the epidemics will have a big impact on the small and medium-sized catering enterprise and strengthening the integrations of the industries which will benefit the large chain stores like Haidilao. In the summaries, we recommend you to pay attention to the brokerage sectors and infrastructure sectors. This is two ETF that track the China brokerage sectors and the China infrastructure sectors. For OBOR, the China Towers has a big percentage on this ETF. This is the 10 security brokerage companies I recommend and their checkers. This is the 8 companies of the 5G SIM stocks. I will pass to the Ming Jun to talk about our current promotions and to do the technical analysis.
Okay, thank you so much, Jieyuan, for the brief summary on the sector recommendation. So for now, let me just share with you on the current promotion that we have. Okay, but before that, I will be launching another poll to check with you. To share with you actually what would you like to see more in our future webinar. So you can take your time to fill this up while I actually run through the current promotion with you. Okay, so right now, Phillip Securities actually launched this new Cash Plus account back in January. And basically, this is our lowest brokerage cost trading for equities. Okay, all custody accounts, namely your prepaid custodian and your margin account, can be converted to this Cash Plus account. So, so do find out more information on at the website, or in fact, you can actually contact your trading representative to share with you more on this account. I believe this will actually save you costs in terms of trading in the US and Hong Kong market, Singapore market. In fact, it is the cheapest brokerage account that we have at the moment. Okay. So if you have more questions, really just feel free to check with your trading representative, because this webinar is tight on time. I believe the questions on also the website can actually tell you a lot on the frequently asked questions. You can find it on the website as well. So do just feel free to look through our website for the details on this account. Okay, you can actually also sign up for a new account online. So that is the easier way, and it's quite fast as well. Okay, so now I'll actually go on to the technical analysis. Okay, this one is the financial company that I wanted to share. Okay, here it is. Okay, so on your screen right now, you are seeing the Hang Seng Index movement. Okay, so for those that is new to me, new to me sharing technical analysis. Okay, so what I always do from technical perspective, right, is that I always look at a longer time frame first. Okay, it's a daily chart with a 3 years time frame before I actually zoom into the nearer time perspective. Okay, so as you can see here, there is also only a few indicators that are usually used. One is the exponential moving average. Okay, this is the 50 and the 100 moving average line. And also the next indicator that I'll use is the relative strength index. Okay, and also one more thing is your trend line. Okay, so 3 years, for this 3 years chart, you can see daily movement, there's quite a huge range. Okay, up to the high back in 2018, 30 over 1,000. Okay, 33,000. Okay, and also the low back in November 2018, which is at 24,000. And interestingly, from July 2018, right, we are actually on a downtrend. I managed to spot this downtrend. Okay, you can see that it has connected the 3 points. For a downtrend to work, it must have a lower high and a lower low. Okay, but this downtrend is a bit different. So we can see the 3 connecting dots at the top. So this actually forms quite a huge resistance line. Okay, so what you can take note for this is that if the price approach back to this line, right, we are looking at a strong resistance. So it's going to be quite difficult for it to pass through, since it's the third time that it reaches in January 2020. Okay, and of course there is also a psychological line of support at 25,000. Somehow this seems like a good strong support over, also a 3-point support area. Okay, this I wouldn't say this is sort of like a false break and still holding at the 25,000 key support level. Okay, so meanwhile, in the shorter time frame, let's take a look at the 1 year first. Okay, in fact, we can see that there's actually a short uptrend here as well. For the past 6 months to 7 months, there's actually a short trend line here. And what we are seeing is that this trend line may be tested at this juncture, and that really depends on how the COVID virus actually plays out, which is important. Okay, I mean, looking at how the US market performed over the past 2 to 3 days, we can see a huge sell-off, and that may actually affect the movement of this. Okay, so this trend line will be important. You are looking for it to have a clear break, and of course, we are looking to get back to this support level at 25,000 point. Okay, you can also see the RSI here actually shows a very good indication of oversold value at during this low point. Okay, so and the RSI at overbought is also quite okay, not very obvious, so I wouldn't really take it, and it has been bouncing off this part over here back in December to January. But for Hang Seng wise, we will need to see if this actually holds, but this look from a technical perspective looks like a good entry level. Okay, and of course, if you want to buy, if you want to invest in the indices, there's a few ways. There's actually ETFs, you can do it, or also you can go through the other platform, which is the other product, which is CFD. Okay, so the next one that I'll be sharing will be on NASDAQ. So okay, you can see let me just confirm the moving average. Okay, so this is a 50 and a 200-day moving average. Okay, so it was a clear breakdown of the 50-day moving average. So the next support we are actually looking out for is your 200-day moving average. Okay, you can see previously it has held up quite well at the 200-day moving average. So for investors, I think there are still room for downside. Okay, and if I use the Fibonacci retracement, if people knows how to use it, okay, it's actually drawing the recent high and the recent low to see the channel of how far it can actually retrace. Okay, so if I look at this, right, I'm looking at 50% retracement at the 8750 level for entry. Okay, 50% usually is quite a good number for retracement to take place in the near term. I mean, using this Fibonacci indicator. And you can also see RSI, right, is actually quickly approaching an oversold. Okay, these are, I mean, it may represent a very good opportunity to enter because fundamentally wise, I think the market is still strong. We are just looking at the virus, mainly the virus spreading across the globally that is causing this movement over the past 2 to 3 days. Okay, and so that is for Fibonacci. Okay, but 8750 first level, and then the moving average, that 200-day moving average, which is the next level you can look at. Okay, if this 8750 doesn't hold. But another good indicator that I mentioned, the RSI also looks like it's approaching the RSI, but not yet. So just look out for this area as well. Okay, so NASDAQ is really quite strong over the past. It has been a really good uptrend over the past year, and this confirms the uptrend over the past 6 months. It has still managed to hit a higher high. Okay, so next, let me just also share with you on the counter that Jieyuan actually mentioned just now on the technical. Sorry, on a financial company, which is the Csc Financial, that has part of, business in the brokerage industry. Okay. Let me just pull that out. Okay, so here you go. Okay, so Jie mentioned this as a good stock for investors that's keen to invest in Hong Kong or China market. Okay, I mean, from my own point of view, it is actually looking not too bad on a technical perspective as well. For the past this one, let me see. In fact, for the past 1 over year,
the uptrend started from October 2018, and it has a strong run up before retracing back. But this uptrend line seems like a good starting point. Okay, and can see that this uptrend looks intact. In fact, for the past few days, even though the market is still not that, it's still very volatile, this one is still maintaining its strength over there. Okay, RSI is nowhere. Okay, so it doesn't represent an opportunity to buy at the moment, but it's something that you can look into. You can also look at it. Let me take a look. Is it also, this is a 200-day moving average as well. Yes, 200-day moving average. Sorry, this is I believe 100 and 200-day moving average. So this 200-day moving average seems like a good measure at the moment for the short term. Let's take a look in the nearer term, 1 year period. Okay, so 1 year period, because the number of days here, there is only so much that you can show. The 200-day is only a little bit of line, but you can see that it actually managed to hold on to it quite well. Okay, so I expect this part to be a strong support moving forward as well. Provided that this uptrend, of course, the best entry will be nearer to this trend line, and that we will not know how long it will take. But if I mean the restriction on Chinese from the Chinese government, the lockdown of the city, I mean, since people are still going back to work, but previously majority of the people are actually home, and that's when they actually uses a lot of I mean, they go online more. In fact, so the behavior of the consumers are changing. So they are moving more towards the E, and that probably is also one of the reasons that people are trading more, may be trading more, because they are now they are at home more often. Okay. And now I will actually go on to the last counter that I will share with you for today, which is on a US counter. I think it's a very popular, very heavily traded one. Okay, let me just share. And most of the investors should know about this company, which is Alibaba. Okay, Alibaba on a long-term 3 years trend sideways, recently break the high. Okay, started from the movement started back in October also. Okay, and it's trended upwards, and now we are seeing a movement. Okay, results and also the virus at the moment. Okay, but generally this counter, it's quite strong. Again, it's e-commerce, so people staying home, they may actually spend more, but then you have also people tightening their belt. So it's a bit of a balance at the moment, but I believe fundamentally this company is still strong. Okay, but so we are looking for a good entry point. So immediately here, right, from January 2019, the low then till now, right, there is actually an uptrend here, which I like to use it as an entry point. Okay, but in the near term wise, let's take a look. You can see near term, there isn't actually a good point in terms of using these technical indicators, because this period from October all the way to January, it has always been going up. There isn't much of a retracement to begin with, and that's why it didn't really hit the oversold level. But here we can see a $200 level seems like a good support level. Okay, so movement across the board for the past 2 days is huge, but for Alibaba wise, it seems like it didn't even break the previous low set. Sorry, not the previous low, as in the recent low in January 2020 here. The $200 level seems very strong. So that may also be a good level that investors may look into at purchasing. But I mean, for the uptrend to stay intact, this one should have gone higher, but no, it didn't. So this area 220 to 230 level may have a strong selling pressure in the near term as well. Okay, with that, I have actually come to the end of the technical analysis. Okay, so I will share with you on the slides first. But please do not go away first. We still have the question and answer for our audience. And before that, let me just quickly go back to the slide first. Okay, and this is our contact details. If you have any more questions that we may not answer today, please feel free to contact us, or you can also contact your trading representatives. Okay. And now I will actually share with you the last poll for today, and actually checking with you what is actually your key takeaway for today's webinar, while we look through your question and try to answer. Okay, so I will be facilitating the Q&A portion. Okay, Jieyuan will be answering the question. Okay. Okay, if you have questions, you can feel free to write it in now. So just give me a moment. Okay, so we have this question on the webinar slides, right? This webinar will be posted on our YouTube channel. Okay, so you can actually tune in. It will be on YouTube. It will not be just the slides. So you can actually watch the webinar again. It should be posted in about 2 days' time. Okay, so we have a few questions that was asked. So Jieyuan, there is actually a client asking which brokerage company actually has the highest upside potential.
I think from the fundamental perspective, I think the brokerage tradings will be the most influential factors to the brokerage companies. As I mentioned before, in January, the daily average turnovers are actually reaching a historic high since 2015. Based on that, after compare the contributions of the brokerage revenues in different companies, we recommend high-tone securities. The ticker is 6837 and listed on Hong Kong, and Csc Financials, or Ming Jun shared before. These two stocks are both listed on Hong Kong exchange.
Okay, so the next one that we have is actually on the MLF and the LPR that you actually shared previously. So what is the link between this MLF and LPR, and how will the rate cut affect the stock market?
First, I will introduce you about the MLF rate and the LPR rate. You can understand as MLF rate as PBOC lend money to the banks and they charge in the interest rate. For the LPR, it's the loan rate the banking give. So the if the MLF rate cut, then it will give them more rooms for the bank to cut its interest rate for rooms. And the time is very tricky. The MLF rate released on every month 17th. And the LPR rate released on 20th of every month. So usually the LPR is 100 basis points higher than MLF rate and linked together. So for the interest rate cut to affect the stock market, you can understand actually the M1 to the M2 to the China GDP is about 200%. So the company must have the money to going on for his business. So if the interest rate cut, it will have a big impact on the China's company's operations. It's a big good news for the stock market.
Okay, so we also have a few questions on one of the more popular counter, which is gold. Okay, we see a lot of questions on gold. So will gold actually rise at this point in time? Any more upside? Okay, so I will share my view. Basically, I think that gold should see more upside in the long term, but in the short term wise, right, we can expect a lot more volatility. Recent high was actually back, I think on Monday, 1,600 and $80 US dollars. Okay, this is a huge run up, and you can clearly see an uptrend on gold itself. Okay, for that, probably let me just share with you on a gold chart. You give me a moment. Let me just pull out the chart. Okay. Right now, you guys should be looking at the gold chart, right? Okay. So this is a gold, not the gold price, but the gold ETF, GLD, trading in US. Okay. Long term, for the past 5 years, right? Okay, don't look at the past 5 years. In fact, just back in 2018 till now, you can clearly see a very good uptrend here. In fact, the uptrend is so fast that you can see the overbought RSI region flashing. Okay, so if you ask me if there is any more room for further upside, at this point in time, I think very likely. In fact, we can expect it to eventually hit the high back in 2011. Yes, which is here. Okay, that was when gold was trading, I believe, at 1,900 level. Okay, so you can see we still have some room to grow to hit this resistance point. We take the previous high, really the previous high back in 2011 as a resistance point, and we actually still have some room to grow. Okay, but how long it will take? I believe this is right now we are at the overbought region. Okay, we should expect it to retrace back a bit before this uptrend to continue to go up, and gold price itself to go up, reaching the 1,900 level. Okay, that's for gold itself. As the stock market is so-called a hedge to the stock market for gold. So you get more volatility, people will actually put their funds into gold. Okay, even though it's a non-yielding asset. Okay, so that is gold itself. And okay, I also see some questions on the YouTube channel and where you can see it. Just go to YouTube and find PhillipCapital. Okay, and if you are still not able to find, you can actually also look under our website to find more information. Still cannot, go and talk to your trading representative. Okay, they should be able to advise you on where you can find it. Okay, and since I'm on it, let me just share with you also one more counter on the TA perspective. Okay, let me see if there's any. I see 美团点评. Okay, let me just take a look on it. Okay, this counter, I mean, I put the maximum. I think it's only just listed last year, right?
Mm.
Yeah. So, look at it. You can see what the past few days. Okay, this one is trading in Hong Kong 3690. This is your 美团点评, and the trend in the short term, definitely this is considered to me a short term from this is back in 2019. Okay, low of 40 and now more than double the price. Okay, fundamentally, I'm not exactly sure what I mean, I know their business model, but I do not know how well they are doing. But looking at it from a technical perspective, right, it looks really strong. The recent low will be at this level of 95, 96 region for entering. Okay, let's take a look. Okay, RSI is non-conclusive, but so this one probably I would wait for the nearest low to actually look for a point of entry. And the past few days didn't really move it much, which is actually a good thing. Okay, means that investors are still, yes, the investors are still in this counter itself and not willing to sell at a lower price than what they already own it for. Okay, you can see it's trading at the moving average of the 50-day moving averages. Okay, so if really drop, I will expect it to hold it at the 200-day moving average minimum. Okay, looking at this past trend over the past year lah. So that is for Meituan Dianping itself. Okay, and with that, I will see if there's any 1 or 2 more questions before we end off. Okay, so we have a question on the long-term prospect for Bank of China shares. Okay, Jerry, maybe you can share with us more on this.
I think for the banking sectors, as I shared before, the profit will be impacted by the interest rate cut from the China Central Bank, but the effect is in a very small percentage. So I think for banking sectors, I didn't expect it will perform like top 10 stocks in top 10 stocks, but I think it's the most stable sectors in this period. Also, the China banking sector is a very high dividend yield, which is average about 5%. So from the dividend yield percentage, is still very attractive.
Okay, so one last one that we have here. So I think this is quite a very relevant point. Okay, so US and Europe markets are very volatile over the past few days. So what is actually your view on the China A shares if the US and Europe market continue dropping like how they dropped over the past 2 days? Jaren?
I think the reasons of the US and the Europe drop is mainly because of the epidemic situations. But as I shared before, the first effect of the epidemic has been gone and digested by the market. But because of the US market and the Hong Kong market are highly correlated, so in China Asia's perspective, we think that the transformation path of the US share adjustment to A shares mainly include 2 ways. The first way is the highly degrees of the internationalizations of the Hong Kong stocks, which will follow the adjustment of the US shares. The change of the AH shares per year will bring the repricing of the Hong Kong stocks and A shares. Secondly, US stocks, the big adjustment will affect the exports, which we believe will affect the industrials like electronic, which were highly sensitive to the export.
Okay, I will personally take one more question here. There is a question on silver as well. So is silver better than buying gold at the point in time? So as we both know, right? I mean, as we all know, right? Actually, gold and silver, they're all precious metals and they are all investable assets. Okay, gold has actually been on a much stronger uptrend than silver. In fact, for silver, right, it has not broken the previous recent high of over 19 US dollars. It's still trading at the 18 US dollar region. Okay, so the gold and silver rate, there is this thing called a gold and silver ratio, which is correctly put out. We are looking at gold being a lot more heavily invested by, a lot more favored by investors as compared to silver. And that actually presents an opportunity in silver itself because historically there is actually this chart showing the gold and silver ratio from the investment point of view. Okay, this ratio actually swing and people actually invest more in silver or gold, and you can actually find out more information online as well. Okay, and so in that sense, right, actually silver makes a very good opportunity, probably in the long run, and we are looking at silver previous high was 40, 50 US dollars, and we are currently at 18 US dollars. But if you ask me how long it will take for it to go up, this one I cannot say. Okay, I will not know exactly how long this ratio can stay here for, but definitely silver maybe. Yes, give me a moment. Okay, so with that, I think we have come to the end of our presentation for today. Okay, so we hope that you have a good understanding on the market outlook that we provided to you today for China market, and also answered some of the questions on the markets as well. I also hope you learn some on the technical perspective. And as this webinar is actually on a monthly basis, we hope to see you again next month, and probably we'll share with you some other interesting topics that may come about during this time. Okay, with that, I thank you so much for your attendance again, and we'll see you again next time.